In this video, I will tell you about a great crypto futures strategy. This strategy, if used correctly, can yield more than a 1000% per trade. However, it is risky if you don't follow the rules. Now let's take a look at what I will be talking about in this video. What do you need for the strategy? What is the strategy? Pre-trade checklist. What is the risk management for the trade? How to set the stop loss. Example of the strategy. This is a altcoin and DeFi strategy, so you need an exchange with many alt and DeFi coins. I use Binance since their futures platform has the most alt/DeFi futures. I have a referral link for Binance. If you register an account with the link, you get 10% off of trading fees. Other than that, all you need is money. I would recommend testing the strategy with a lower balance before risking a lot of your capital. So what is this strategy that can potentially yield you 1000% ROI? The strategy is based on the volatility of alt and DeFi coins. As you can see on the screen, these coins fall or rise a lot, sometimes more than 30% in either direction. This volatility is what we are going to use to make money. The strategy itself is a reversal and continuation strategy. What we will be looking for is coins that have reversed after either reversing or bouncing off of previous levels of support or resistance. Some of you have likely traded with a similar strategy, so you should be familiar with it. As you can imagine, a coin that moves 30% can be detrimental to your whole account if you screw up, so that's what I am going to talk about. To prevent any huge losses, what we want is confirmation. At no point in time must you hope that the price will break or continue. When it comes to the trade itself, you should not risk more than 5 to 10%, so don't gamble. The trade itself must always be protected, otherwise you have a high chance of getting a liquidation notification. So how should we protect it, you ask? What you should do is use isolated margin. This ensures that you don't lose more money than what you put in. As for leverage, you can set it to the highest if you dare. However, if you want more wiggle room, you can lower it. One last thing you should check for is the traded volume, since low liquidity can cause massive candle wigs, which can go against you. Entering at the right time is decisive, because with high leverage the trade only needs to move 2% against you to get stopped out. As I mentioned before, we will be looking for confirmation before entering any trade, so here is what we look for before, for example, shorting a coin. Number 1. Have at least one red candle on the daily chart when the price reverses after testing a resistance level. Also, if you are looking to trade a coin that broke through a support level, you also need to look for one red candle on the daily chart. Number 2. The market is trending in the same direction. If you are, again, looking to short a coin, you need to make sure the market is in a downtrend. You must avoid coins that aren't following the market sentiment, so if the rest of the market is red, besides the coin you're looking at, just avoid taking that trade. Number 3. The coin has at least $10 million in traded volume. You need to check this and make sure there aren't any massive candle wigs, since they won't work in your favor. Number 4. Last thing I look for is that the coin is consistent. So if you wanted to short a coin that reversed after testing the high, and there is at least one red candle, only trade that coin if it is still falling the following day. So in this case, I would enter the trade if the coin was down by at least 3% the following day. So how should you set the stop loss? Your trades must be made using the trailing stop loss order type. And the callback rate should be 3%. This means if the coin's price moves 3% against you, the stop loss will trigger and close the trade. On the screen you can see a picture of the coin Yearn Finance. As you can see, the price tested a previous high and failed to break through the resistance level. This is a good example of a setup for the trade. In this case, I would short it and just wait till my trailing stop loss to get triggered.